Down about 77 points. It's a good thing Uber is not part of the Dow. In one of its more painful days since going public some months back, posting a $5 billion loss. Again, the financial community expected a loss, just didn't expect one like this, nor sort of a downbeat outlook. Market watcher Dave Maney on this. What is happening here?
Well, the giant block of losses, Neil, are from stock-based compensation. So in my mind, I kind of drag that away because that's about, I mean, it's very much about their shareholders, but it's not about their operations. But they lost $1.3 billion
Just explain
from
that.
operations.
They're now in that period, they were able to sort of sell and cash in on their stock, essentially, right?
Yeah, exactly. But underneath that sits this very big fat loss. You know, they're still, if you lose $1.3 billion in a quarter, you're losing $5 billion a year, or that's the pace you're going at. And they do have a giant pile of cash. But in my opinion, what it looks like to me after you kind of parse through their statements is they're trying to do a whole lot of things. They're trying to compete with everybody in every category of the mobility space. And it appears to me they're not clearly winning in any of those spaces from an investor point of view. And that certainly sets off a lot of flashing danger signals.
Gary, they say we're building something, and like Amazon, it takes a while to get some money off of it.
37, 22, 20, 14. Last 4 quarters sales growth year over year. Complete deceleration. Every time a ride occurs, they lose about 60 cents. Not a great business model as far as I'm concerned.
Then they would have to increase the cost of the ride.
There is no doubt in my mind they're going to have to. I think it's going to be the revenge of the yellow cab going forward, seriously. And Dave's right. I just think they're in too many things. They want to be all things to all people, and they forgot about their main niche, and I think it's a huge mistake.
Wouldn't Lyft benefit in that environment?
Lyft would. Uber is going for scale over profit, obviously. I'll add some numbers to that. 5.2 billion loss, 3.2 billion in revenue. That's a big difference. How forgiving will investors be? I think more forgiving than we might imagine. I was reading a couple of analyst notes on this, and they say, look, what they're doing is generational. It's Amazon-esque. And it might work out for them in the end as they go for that scale.
Yeah, but like as you mentioned, they're trying to do too many things. Yeah. And I was reading about this, and one of the things they're going to try to do is add scooters. Like what? There's never been a problem in my life where I'm like, if only I had a scooter, everything. Like, I just don't think scooters are how you solve problems ever. But they are investing more in their delivery food service, which I think is smart because I did use it this morning. I got an Egg McMuffin from Uber Eats to my house.
For someone so thin, you eat.
I eat terribly.
Companies like Uber and the fake meat company are lucky we're in a bullish market. If we go into a bear market, they are going to be cut in half before you can say boo, because in bear markets, the curtains come down and losses. Good night, Irene. Then you can't raise money also. So I'd be really careful about them right now. Valuations are an absolute joke. I think Uber stock should be worth about $15, not $40. And I mean that.
What do you think of that,
But they're
Dave?
global.
An interesting thing this morning, if you go search, for instance, they touted, well, here's the look at the growth in the food delivery segment. If you go search top food delivery apps, you will find that there's a top 10. Not that there are only 10 competitors, but there's a top 10, and they're one of 10. And so this idea that we're going to run the table in all of these segments is phenomenally expensive. And many of these other companies are focusing on their one segment because they're trying to compete in scooters and mobility. They're trying to compete in food delivery. They're trying to compete in cargo. They're trying to compete in airplanes. And more focused competitors are nipping at their heels and getting higher in every one of those segments, and that's not a bet I would make.
And to tell you about the business, you know what the worst stock in the market is almost in the last year? Grubhub. It's just a very tough business, too much competition, and they got to fight each other on price. Some of these deliveries cost a ridiculous amount of money.
Well, not if you take a scooter.
And buy avocado.
Yeah, there we go. All right, we're going to take a quick break here. Thank you very much, David.